Kitco Mining's special coverage of Mines and Money in Miami, Florida is brought to you by Gold Shore.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mines and Money Conference in Miami and Florida. Today we are talking about mining investment, and joining me is Whitney Kofford, MD at Sorbie Bornholm. Whitney, welcome to Kitco.
Thank you. Glad to be here.
Now let's start off by finding out a little bit about Sorbie Bornholm and what you do.
Yeah, absolutely. So Sorbie is a UK partnership. We are focused mostly on micro, small, and mid-cap companies. We do direct equity investments, and when we're evaluating a company for potential investment, we're basically looking for a growth story. So we want to understand what are the milestones over the next at least 2 years and hopefully beyond. Our average investment horizon is about 3 to 5 years. And we want to get to know management and understand how their skill set and their backgrounds will help inform and execute upon the plan.
Okay, that sounds quite simple when you say it like that, but I imagine it's much more complicated. You're an investor, we are at an investment event. How do you see the mining investment landscape at the moment? Do you see a lot of opportunities out there? And also, what concerns do you have?
Yeah, absolutely. So for us, the opportunity always lies in the contrarian play. So we look at what is not popular at any given time. And to be quite frank, I think mining in general is not necessarily the most popular industry to be investing in. So there's a great opportunity for, I think, all types of investors. For us, I would say the energy transition is a huge opportunity. And we, as far as risks, I would say short-term thinking is always a risk. So we want to understand not just what is the company going to accomplish in the short term, but what's the long-term vision and how are they going to grow the company to the point of, whether it's going into production or whether they're looking to be taken over. I think right now there's some uncertainty in the market, but I also am hopeful that there's a change coming soon and a shift, and that I think the industry is starting to shift towards trying to be more communicative to generalist investors, and I think that's going to attract hopefully a lot of new investment and new opportunities, both for companies and for investors.
Thank you. Now, focusing on the sort of the nano, the micro, sort of mid caps, I mean, that's obviously hundreds, if not thousands of companies. So that's quite a task to even engage or think of engaging with that. I like the point you made about short-term thinking, because I think it would be fair to say a number of companies in that group are, they're always struggling for finance. It's always a challenge, and that obviously puts let's say, a financial wall on their thinking, how far ahead they can think. Do you see management teams thinking too short term because of that, and not looking beyond that and having a more holistic view?
Yeah, absolutely. And that's really to your point about there being thousands. We literally have over 7,000 companies that we pull into the database that we use to evaluate companies. And one of the things to narrow it down is when we're talking to management, we're asking questions to get a sense of how are they thinking about the business and the financial management. And you're absolutely right. Some companies fall into the trap of, okay, we're short on cash, and it's a completely understandable mistake to make of thinking too short term. But I think if you have a clearly defined vision and a clear plan of where you want to get to, then how to get there becomes the focus. And so then the short-term thinking, instead of being reactive, you're being intentional. And so absolutely, I completely agree that short-term thinking, it can cause a panic, it can cause companies to make poor financial decisions, poor business decisions. But if they're staying focused on what the end goal is, then that helps provide more clarity to what they're doing at the current time.
I definitely see that as a differentiator, because I've been in and around the sector long enough, and I see that a number of companies realistically don't seem to have a clear strategy, or at least they're not communicating it, or they're very poor at communicating it, and don't have a business plan.
Right.
I mean, we're here at an investment conference, you see the presentations, you look at the corporate presentation, there's no slide at the beginning saying, this is our business plan.
Right.
We want to discover, 5 million ounces in the Golden Triangle within 5 years. How difficult is it to do that? What's your view there?
I think it's a couple things. I think one thing that can be challenging about coming up with a vision is a vision requires you to think big. And especially for an earlier stage company, it can be hard to define where exactly you want to end up. And so I think, but you have to pick a path, right? You have to just decide what you're going to do and stick with it, and then keep executing and keep working towards that goal. And of course, there may be reasons to evaluate a shift in strategy, but as long as you're keeping that end goal in mind, I think it makes it easier to systematically work towards that goal. I think what's hard about being a CEO is you have to balance being in the day-to-day and the immediate term and making these business decisions with continuing to think long-term. And for smaller companies on the micro to mid-cap end of the spectrum, they don't have as many resources, right? Their teams are smaller, so a CEO of a major, they're not having to do all the nitty-gritty day-to-day stuff for marketing and investor relations, and maybe they're not as involved in the day-to-day of the financials and accounting, but the CEO of a microcap, they have to manage all of that. And then also, right, still explore, still focus on the vision. And so it can be very easy to get sucked into, I have so much to do on this day-to-day, that you lose sight of the vision. And so I think that's something that that CEOs could, and I'm completely guilty of it too. It's human nature just to be reactive and in the moment, but staying focused on that vision, I think you have to constantly repeat it to yourself.
When you speak with companies or listen to their presentations, if they don't transmit to you a clear business strategy, a business plan, is that for you a means of sieving through the thousand opportunities, or is that the contrarian aspect where you think, okay, they don't know what they're doing, I can do a little bit more work in this and see the opportunity that they're perhaps poorly communicating. If they're poorly communicating that to the market, they're probably undervalued, ...
Exactly, yeah. So just to make a distinction, there's a difference between a company that has a vision and a plan but is not communicating it well, and a company that just doesn't have anything, right? So when I'm talking to a company, if they're not clearly communicating the vision, I'll start asking questions to see what their plan is. So it's things like I'll just ask, what's your vision? And sometimes companies will kind of hem and haw and say, well, it depends. Well, we're going to respond to certain
red flag.
Exactly, red flag, right? But then when you ask that question, the other side of the coin is I'll get a very clear response of, oh, this is where we want to be in 5 years. And so yeah, sometimes I do have to suss out and work on the communication, and that's something we do work with our portfolio companies on, is how to better communicate the story. So if I can see what the story is and the problem is just a communication issue, that is a solvable problem. If the problem is they don't have a clear vision, that's a red flag, and I'm probably going to say thank you for your time.
Now, let's follow up a little bit on the marketing and IR. We've spoken in the past about this, and you often travel with your marketing manager. Is that so you can get her professional opinion of how well she thinks companies are marketing themselves or not?
Yeah, so what I love about her is her background is actually in consumer products. So she is not a mining person. And so we balance each other really well because, I'm talking to mining companies all day, every day, and she understands the very basics of the industry, but she doesn't, she very intentionally doesn't dig in like she normally would. And the reason for that is so that we're getting the two different perspectives. How is a generalist or someone who's not as familiar with the industry going to view this story and how it's communicated versus how is a more experienced mining investor going to view this story? And those two things can be hard to meld together in a compelling way. And so when she's with me, it's very fun for us to bounce ideas off of each other, and sometimes we'll have different perspectives on a company. You know, we'll come out of meetings and we'll debrief and say, what did you think? And, you know, I'll be like, oh, I thought this was so interesting. And she'll say, well, I didn't get this. I didn't understand what they were talking about in there. And
so to use a real estate idiom, she's looking at the curb appeal.
yes, exactly.
Yeah.
Absolutely. Yeah. And again, right, if a story has a clear vision and a compelling story, then she can figure out how to communicate that, how to market it. And a lot of times it comes down to the people too, right? It can be hard as, say, a gold explorer. How do you differentiate? There's a million gold explorers in the world. But if you have a compelling individual or multiple people who are driving that company forward, then there's a story there. And again, if they have a clear vision and they're systematically working towards the end goal, that is a story you can communicate to the market and to investors, and they'll get excited about that progress.
Well, typically, what would you say is lacking? I mean, it does seem that companies are promoting themselves in the same way they did 10 years ago, 15 years ago, 20 years ago. Only difference being their handouts are now in colour rather than black and white. But, you know, that's perhaps being a bit unkind, but realistically, you know, there's a lot of technology used in the sector. There's a lot of technology used in exploration, AI, drones, all the rest of it. Lots of exciting things, but you really don't get a sense of that when you're at an event because everyone's doing the booths and the same thing as always.
Right.
What can and should companies be doing to have better curb appeal?
I think that companies could do a better job of leaning into their unique company personality. So every company, and a lot of this is driven by management and the board and the leadership, right? But I think rather than going the cookie cutter route, it's important for companies to think about what is the brand voice. And, you know, you think about any sort of favorite brand. Why are you attached to it? Why do you enjoy that brand? It's not necessarily because, it may be because of a single individual, but a lot of times it has to do with how it makes you feel, right? And so companies can think more about that. How am I making the investor feel? How am I, you know, making the person on the other side of the camera feel? And so there's an emotional component to investing. And I think if you can tap into that and communicate your story in a way that's compelling, you're going to have a much longer term investor than otherwise.
We're talking about investing in the junior space, so imagine the emotions are angry, frustrated, and then you have that brief moment of elation when something actually delivers you a triple-digit return.
Right.
Okay, let's value investor. You're looking at sort of contrarian opportunities. Many commentators talk about the incredible values available in the market because the metals prices, gold and copper, have gone up so much, but the valuations are much lower compared to in the past 5, 10, 15 years ago. An alternative view could be that in the valuation game has moved on from the past, and companies should not expect to receive the same kind of valuations they once did. What is your view? Is there a catch-up that can happen, or has the game changed?
I think it's a little bit of both. So I think the game has changed in the sense that, so I'm relatively new to mining investing. I've been doing this for about 5 years. But my understanding is that historically, investors were very well educated on what is a good drill result, right? And so those kinds of things would really drive the share price and the market response. Well, I think now investors are looking more for cash flow or, progress. And so it's, in a sense, I almost feel like they're holding companies to a higher standard in that, again, you have to have the vision, you have to demonstrate that you're systematically moving towards that goal. And the closer you get to the goal, I think that's when investors start to pay attention. On the flip side, I do think that I think that there will eventually be a shift in the market. And I think that the companies that continue to execute and maybe are not being recognized those companies that are executing are going to see a bigger upswing than the ones that maybe, oh, well, we'll wait and see, or we'll pause, or we'll slow down. And so I think it's a little of both.
So potential bifurcation in some ways there. Yeah. We are in the midst of the 2024 financial results reporting season, and it's been a mixed bag, I think it's fair to say. Costs continue to go up, with perhaps one or two exceptions, notably Newmont, who reported last night their costs for the year came down about, all-in sustaining costs came down 5%. The gold price has gone up more though, allowing many companies to post or now enjoy all-in sustaining cost margins in excess of $1,000 per ounce. Some stocks have responded very well to the higher gold prices. Many are at sort of 52-week highs or even multi-year highs. What's your take on the results so far? Are they good enough?
Are the financial results good enough? Yeah, I think so. I think the rising prices, it's going to depend on the company. I think some of that is probably due to inflation. Some of that is, probably due to uncertainties about what is going to happen politically. There's a lot of concern about the potential of U.S. imposing tariffs. And so I think some of the rising prices might be unavoidable, but I also think that there are things companies can do to really evaluate if those costs are being effective and giving a good return on their investment. So, for example, we were talking about marketing. I think marketing is an area where companies could really, I think that's an area that needs to change in the sense that there needs to be more data related to what types of marketing initiatives are working. And so companies can dig in and say, okay, here's what we're doing. We made this decision and this is why. But is that still giving us the same return on investment? And so making sure that you're not doing something just because we've always done it that way, and looking at, is there a new technology? Is there a way to make this more optimized? And constantly looking at every single line item of where can we, improve?
One thing that is clear with this gold price bonanza, pretty much every company now seems to have a normal course issuer bid, a share buyback program underway, and that's their main vehicle for returning capital to shareholders, although I would argue that's a sleight of hand because it rewards people to leave rather than to stay. People that stay in the stock want to see more dividends. And in terms of your sort of points on marketing, doing share buybacks doesn't do anything for your yield. In fact, it makes your yield worse, which in marketing terms is a non-starter. Why aren't companies increasing their dividends to improve their yield to attract generalist investors?
Oh, that's a good question. I don't know. We'd have to ask the companies. I mean, it may be, again, maybe it's just because that's how they've always done it, and there needs to be an evaluation of, what's going to get investors to stay invested and stay with the company, because, that's going to drive the share price more than, like you said, this sleight of hand.
Okay. As I mentioned, many gold companies are trading at 52 weeks highs or multi-year highs. Are we in harvest time, or do you think there's still a lot more to come and it's worth hanging in there?
I think, and I hate that my answer is always it depends, because it's kind of a cop-out answer, but I think it depends on the company. I think you really have to as an investor, you have to believe in the companies you're investing in. And so for us, what we do is we look at, okay, what is our thesis for this particular company? Because, we're going to factor in the industry and the macro, but this particular company, what is their plan? Do we see a growth story here? And if so, we're going to stay invested to see that through. But if it's, if it's a company where and it also depends on your investment horizon. So if, you're looking for, okay, I may, divest this in a couple years versus 10 years, those are going to be a different thesis for each thing. So I think as an investor, you really have to evaluate what your plan is, what your vision is for your portfolio, and again, systematically evaluate continuously, is this company still on track? Do I need to adjust? So I think it's an individual investor decision.
Well, let's finish on one sort of final point, and it's kind of related, well, it's very related to everything we've been talking about. To what extent or not when you speak with CEOs, do you see genuine and real enthusiasm or excitement for what they're doing? And I phrase it like that because I would argue that if a CEO isn't excited about their company and their project and their prospects, how on earth are they going to excite you to write a check?
100%. So I will say that geologists are some of the most passionate individuals I've ever encountered, and that's part of the reason I love working in mining and investing in mining. But I do come across companies where this is just a job to them, and that's okay, but that probably isn't the type of company I want to invest in. I want to invest in an individual who is excited about what they're working on, and you're absolutely right. That comes through when they're talking. And so I would say a good amount of people are excited about what they're doing. I think the last few years have been really tough on especially the micro end of the market. And I am seeing CEOs who, 2 years ago when I first met them, they were excited. Now they're beaten down. They're having a hard time. And I think the individuals who can continue to tap into that passion and that be excited about the vision, they're the ones that are going to succeed because they have the tenacity to continue executing even in a hard time.
Well, this has been a wonderful conversation. Whitney Kofford, thank you very much for joining us today.
Thank you, Paul.
And we have a lot more to come from the 2025 Mines and Money Conference here in Miami and Florida. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Mines and Money in Miami, Florida is brought to you by Gold Shore.